Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I am going to be talking about the Dollar Index Fund. And the dollar is having a pretty significant rally. It has been able to break above that previous bearish engulfing pattern on the chart. So this is a clear indication that perhaps the trend might reverse. You have to be really careful right now because the market really depends on the dollar. You know, if the dollar strengthens, chances are you're going to see stocks fall. If the dollar weakens, you're going to see a pretty strong rally. Right now, what happened this past week is that people were buying stocks in anticipation that the Federal Reserve would make some announcement saying, yeah guys, we're going to buy up $500 billion worth in bonds, don't worry, we're going to inflate the economy. Well, that never really happened. So, since we're not getting the Federal Reserve to come in and bail us out, what we're going to be dealing with over the weekend is a Spanish bailout. Because obviously the Spanish government isn't able to borrow money from the bond market. What they have to do is borrow it from the ECB. So, you know, this means that the government is literally insolvent over there, and that's not good. So as long as that continues to happen, the euro will continue to be sold against the U.S. dollar, and we're anticipating a lot of monetary easing. We're actually anticipating the euro-U.S. dollar to continue to fall as the European Central Bank starts to lower their interest rates even further. It wouldn't be surprising at all if we saw the ECB lower the interest rates down to 0.10% in the next 2 to 3 years. So that basically means that the euro-US dollar is in a long-term downtrend right now. This isn't some short-term. This issue isn't short-term. It's really long-term. Anticipate the euro-US dollar to continue this long-term downtrend, and because it is a long-term downtrend, continue to expect the dollar index to continue a long-term uptrend. And so as long as this long-term uptrend takes place in the dollar index, you should anticipate stocks to have a really difficult time trading higher. If not, you know, it could actually just continue to, you know, actually fall and roll over into more declines. Um, and that's the problem with the dollar. You know, it's that, you know, we're trading on macroeconomic indicators. We're talking about political issues right now, and that's what's dictating the movement of stocks. And you know, stocks are a completely different thing from, you know, governments and large organizations like that. But you know, it all comes down to the bond market and whether or not people have confidence in buying into these European bonds. And so as long as they're not, you know, the money people are willing to invest into the economy will continue to shrink. We're having a deflationary spiral in Europe right now, and since the Germans themselves don't even know what the hell they're doing, they don't even know what kind of political stance they should take. They don't even know, you know, why in the heck are they bailing out their neighbors? I mean, you know, that's not their problem, but apparently it is. So, you know, Europe is in a mess right now, and I think this the European bond market, those yields will continue to go higher, and so as long as yields continue to go higher, and the the euro-US dollar continues to fall, it is a very dangerous situation to be in, and unless if the European Central Bank were to come out and perhaps inflate the European Union with maybe $3 to $5 trillion in extra euros, somewhere in that area, 3 to 5 trillion extra euros, that would probably have a substantial impact on the economy, and that would be a real signal that perhaps the markets will reverse. But until we get a really large commitment towards a really large European Stability Fund, we're just going to have a lot of problems coming from Europe up until that point. And so as long as that continues to happen, guys, it's a good idea to be buying into strong stocks. The dollar, just anticipate the dollar to continue this upwards trend, and you know, to be short the euro-US dollar would probably be the most intelligent idea, rather than trying to be a long trader on the dollar. So take care, folks. This video did run a little long, but I hope you guys took something away from this, and I'll be releasing more videos on Monday, and I'll be talking to you guys more maybe over the Monday. Maybe I'll release a couple more videos throughout the weekend. But again, you guys have a wonderful weekend, and we'll talk more on Monday. Take care.